In the studio, the Fast Money studio in Johannesburg, is Graham Kerr, who's the CEO-elect of the new spin-off from BHP Billiton. Graham, thanks very much for joining us this evening. Back in the 1970s, there was the original celebrity chef. His name was also Graham Kerr. He was called the Galloping Gourmet. What are you cooking up at BHP Billiton?
Well, Lindsay, I'm certainly no chef, but I can tell you what we're doing at BHP Billiton. Yesterday, as part of our annual results presentation, we spoke about obviously how we're performed as a company, but at the same time we spoke about a demerger we're looking to put in place. And the demerger would essentially create two companies out of one great portfolio. One would be focused on huge, gigantic resources, focused on iron ore, coal, copper, oil and gas, and perhaps longer term potash. And the other company would be a more purpose-fit company that would be demerged into a new vehicle which would have assets in South Africa, Australia and South America, which would be a global diversified company geared towards global growth.
There's sort of an earnings disparity between the new co and the old co, and you've got the new co, and I think around about 96% is in the old co and just 4% or a small percentage in the new co. Why is that? And more poignantly, I think, is this a thumbs down for South Africa and South Africa's resources industry?
Well, let's perhaps start with your last question there, Lindsay. Absolutely not about country, absolutely not about commodity. This is all about the type of the asset and the scale. If you think about what the new company looks like going forward, it'll have about a third of its production coming out of South Africa. It'll have about half coming out of Australia, with the balance coming out of South America. When you think about BHP Billiton, it is the world's largest resource mine. It is blessed with a number of what we'd call gigantic tier one resources. And those resources have lives of 100 plus years in many cases, which is quite different from your normal mining operation. And as a consequence, we see for the shareholders in BHP Billiton, by concentrating on those very large gigantic resources, or what we call the four core pillars, they can be optimised for shareholder value. As a consequence, it does mean you have some other assets in the portfolio. While they're not gigantic in terms of like the four core pillars in BHP Billiton, they are actually highly attractive assets. For example, we have the world's largest manganese business in the demerged vehicle. We also have the world's largest silver mine. And if you talk about performance, this company actually had last year about approximate sales revenue of $10 billion US, so it's not small. If you talk about the last 10 years, it's been economically robust during the cycle, had an average EBITDA margin of 34% and an average EBITDA of 3.3 US billion. So this is a high quality company. It's just not the same size and scale as the world's largest resource company.
It's a fascinating story because commodities throughout history, of course, are cyclical. The prices go up and therefore more supply comes on board, and then prices go down, and companies like BHP Billiton have to adapt to that. 2001, Brian Gilbertson merged BHP with Billiton, and now you're almost demerging it. Does that say something about the corporate strategy of BHP Billiton, or does it say something about the super cycle, so-called, in commodities?
Look, I think, Lindsay, if you think back to actually the origins of Billiton and the origins of BHP before the merger and up to the merger, it's been a constant evolution as the portfolio changed. For example, BHP Billiton, or BHP before the merger, had a large component of steel within it. We basically demerged the steel. This is the next evolution as we actually tighten up the portfolio. And we think, look, both vehicles will add a lot of value to shareholders, and we think both vehicles will be very attractive to shareholders.
When people used to speak to me about which resources company, which diversified resources company you would pick, it would always be BHP Billiton over the last few years because of your petroleum exposure. Where do you look now? Where is your focus going to be? Oil price coming down from 115.5, 116 down to 101, 102 at the moment. Where are you hanging your hat on as a big group, not just Newco but also Oldco? Where do you see the commodities evolution in the future?
Look, don't make no mistake, BHP Billiton post the demerger, if the shareholders approve it, will still be hugely diversified. It'll have iron ore, thermal coal, metallurgical coal. It'll also produce copper, uranium, a number of other base metal byproducts. In the oil gas space, it'll have conventional oil and gas, LNG, shale, NGLs, and we actually see an opportunity to grow a fifth pillar in potash. So there's still plenty of diversity in BHP Billiton. There's still plenty of growth options left in BHP Billiton. We just see this as the way to maximise value for the BHP Billiton company post the demerger, but also to actually maximise the value for the new company as well.
Sitting with you is Ron Clipham from Kratos Wealth. Ron, you've got a question for Graham Kerr.
Yes, a couple of questions, Lindsay, if there is time. I just wanted to ask Graham, with the whole turnaround in the cycle on aluminium, should this not be a core asset when you see substitution of aluminium for steel in cars, trucks, when you have a look at things like jet engines, all the new models of aeroplanes and stuff like that? And the second part of the question, Graham, is what really happens to Hulamin with this demerger now? There were supposedly ongoing talks, nothing was reached. Does this make this situation better for Hulamin or worse?
Look, let's maybe start the second question first, Ron. With Hulamin, discussions will be ongoing. The new company will honour the same kind of commitments and discussions that have been put in place under BHP Billiton. It'll have a common set of values and beliefs. So I think, that discussion will continue no worse or no better. It's just a matter of actually going through the normal commercial negotiation. Going back to your first question around aluminium, look, I think, there's not many people who disagree with your view that longer term aluminium is an attractive commodity. Again, for BHP Billiton, it's a question of scale. In the BHP Billiton company post the demerger, it's very focused on large, gigantic resources and very much upstream. In Newco, you'll have the aluminium business, which is more process intensive, not on the same size and scale, but it's still a highly attractive business. But the important thing, and one of the real benefits of the demerger, is shareholders who currently exist today in BHP Billiton get paper to both companies. So they're not choosing time in the commodity cycle, they're choosing the opportunity to derive value from two great companies who are focused on different things, but they don't have to choose to sell out. They're exposed to the commodity upside.
Graham, would that also mean that the aluminium would become a core entity of Newco?
Look, I would say, aluminium is an important part. I mean, obviously you've got the Worsley, for example, in Western Australia, which has bauxite, which it refines into alumina that's fed into some of the smelters. I think that integral part of the chain is important, and that won't change.
So this should be part of a backward integration.
That already exists.
Sorry, let me just interject here a little bit. Yeah, this is a demerger, and we've had the consolidation period, which we had in 2001, the merger, now the demerger. It's all to do with the commodity super cycle, I think, and the prospects for the commodities market. Graham, the market didn't like the fact that you weren't indulging yourself in more of a share buyback. Number one, was that unfair of the market? And number two, is there a chance of consolidation in the industry? There's all sorts of talk about Glencore and Anglo-American. It's unfair for me to ask you about that, but are you sort of adjusting yourself, you resources companies, for a little bit of consolidation, which is also interesting for market watchers?
Well, perhaps let's start with the first question, Lindsay. And as you think about how we're set up as an organisation and history of performance, yes, there was some feedback in the market, particularly in London and Australia overnight, around maybe expectations around the buyback. But I think we shouldn't lose sight of the fact that BHP Billiton, has a higher payout ratio than its peers. Over the last 10 years, it's delivered $64 billion US of capital back to shareholders, which is roughly half of underlying earnings. So we have an incredibly strong track record of returning cash back to shareholders. What we did say yesterday is, look, our balance sheet has been getting stronger. At the half-year end results in February, we spoke about getting to a net debt number below $25 billion. We're not quite there yet, but we're close. You see productivity improvements continuing to have an impact on the business positively. We see capital expenditure going down. We see our free cash flow generation continuing to grow. All we said is we would like the balance sheet to get stronger, and then, as we've done in the past, we'll continue to return excess capital back to shareholders. So look, I think, little bit of disappointment, but we've got a strong track record. We expect to generate cash, so shareholders will get it. So I think that's the first point. On your second issue around consolidation, look, you know, I'll give you the BHP Billiton perspective today. You know, we have a strong portfolio. Post this merger, demerger, it becomes stronger, if you like, in the core pillars. The one thing we are not short of in both companies is growth opportunities. And look, I think there's enough growth opportunities in both of the companies to continue to grow their earnings in those businesses. I think it would be very hard in this day and age and complexities of doing an actual takeover or acquisition to find a more value accretive way to spend shareholder money outside of doing our own projects.